Costco, the place where everyone goes to impulse buy 10-pound bags of avocados and lifetime supplies of Q-tips, is cashing in on yet another impulse purchase. And this one might be the most expensive one that they've ever cashed in on. It's also one of the riskiest ones, both for them and for the consumer, and I'll explain why in a minute. But here's what you need to know. Costco is now buying physical gold and silver, cashing in on the craze associated with the volatility in the market and the fear that people have of the US dollar collapsing, which is kind of scary because that lends the trust associated with the Costco brand to an industry that is very much one that is predatory, at least in my opinion. Because here's the thing you need to know about buying physical gold. Most people who buy it only buy it because they're scared, and the reason that they're scared is because the people who sell it market it that way. And I'm going to tell you right now that if you buy physical gold from Costco, this might be one of the stupidest impulse buys you ever make, even worse than that $1,500 electric bike or that Bowflex that's been sitting in your basement since 1995. And I mean, unlike physical gold, at least those two things had at least some form of use for probably 2 or 3 times. And I'm also going to talk about some better investments like subscribing to this channel or liking this video so more people can see it. And I'm going to show you the exact numbers of why this is a bad investment. And I'm going to tell you right now, if you're one of the lucky ones who gets the opportunity to purchase 2 ounces of gold from Costco, well, you're already pretty far behind where you need to be in order to actually fight that fight. So let's start by talking about gold as an investment. And I cannot reiterate enough, anything you do to gain an advantage, especially when it comes to money, is an investment. And some people will try to convince you that buying gold is not an investment, but that's just not true. And that leads into a conversation about all of the lies and all the myths that are told about physical gold in order to get you to make the purchase. Things like the idea that it's a good inflation hedge. Well, it is a good inflation hedge, but the people who are selling you gold know that it is only a good inflation hedge if you bought it way prior to inflation starting. If you're buying it now when we're in that inflationary period, you're already way behind. And there's also other investments, which I'll get to a little bit later on, that are far better inflation hedges than physical gold. And then there's this fallacy that the US dollar is going to collapse, that the BRIC nations are going to take over, the Chinese yen is going to be the new accepted currency worldwide, and that means absolute destruction for the dollar. And that just isn't the case either. In fact, there's never been a reserve currency that's been replaced with a new reserve currency that hasn't lasted the test of time. Think about the British pound, which obviously still exists, or the Dutch guilder that was the reserve currency prior to the pound, and both of those currencies lasted the test of time. In fact, the guilder only disappeared in the early 2000s after the creation of the euro. So reserve currencies like the US dollar, even long after they've been replaced, tend to maintain their value and last a very long time. And then there's, of course, my personal favorite, the fact that central banks are buying gold at record paces, and this is why you should too. Well, I'm here to tell you that even though central banks are buying gold at record paces, the amounts that they are buying are rounding errors relative to their own currencies. Oh, and by the way, the biggest purchasers of gold are China and Turkey, and the reason why they're buying it isn't necessarily to back their currency, but so that they've been able to illicitly trade with Russia post-Ukraine invasion. So there's all these things that when compounded make a really compelling case for purchasing physical gold. But when you really think about it, is the need there? And who's really making the money when you buy those gold bars? Well, the answer is the dealers. And just like every other dealer of physical gold and physical silver, Costco is very much anxious to get you to take their gold in exchange for your cash. That very cash the gold and silver gurus are trying to tell you will be worthless. And the reason that Costco would rather have your cash than have that gold is because that they know that that cash is much better suited to helping them build a business and profit. They know that gold is not the best investment that they can make, otherwise they would just hold on to it. No, what they're trying to do is they're trying to cash in on the fear in the market. And to prove this point, they've also started stocking up on goods that are the type of goods that people who fear that the worst is coming are going to buy. One might say they're trying to cash in on the impulse purchases that people who fear the apocalypse tend to make. Remember toilet paper gate during the early pandemic? Yeah, that kind of purchase. And before I get into the numbers about why you don't want to make this purchase, and I think those are going to blow your mind, I do want to touch on the fact that there is significantly better assets to own than physical gold, especially when it comes to hedging against inflation. And let's start simple. Let's start by looking at the performance of gold versus the S&P 500. Now, gold dealers would have you believe that gold is outperforming stocks and bonds and everything else, but it's simply not the case. According to Bankrate.com, as of October 3rd, gold has returned 12.6%. The Vanguard S&P 500 ETF, which tracks the S&P 500, has returned 21.6%. And while gold has had a very good year at 12.6% return, over the long term, gold tends to not perform that well. In fact, if you extrapolate the returns out over 10 and 15 years, it only returns 3% and 4.5% respectively. Compare that to the S&P 500 that has returned over 11%, and you can see that stocks tend to be a significantly better investment. And if you stay in the market, probably a better hedge against inflation as well. Now, in addition to stocks, there are other investments that tend to outperform gold as well. Things like bonds, especially in a high interest rate environment. Things like real estate, just take a look at the positions that Warren Buffett just took in some of the biggest home builders in North America. And most of those other investments have a significantly lower risk relative to the return that is expected. In fact, it's my belief that physical gold is one of the highest risk, lowest return investments that a person can make. It has the volatility of stocks, but the returns of bonds, which makes it an inferior investment to both. And if you need more evidence that this is a volatile investment, just look at the fact that Costco is not even selling this in stores. It is online only, and the reason why is because the margins are so low on this product that between the time that Costco shipped it from its warehouses to its stores and the amount of time that it potentially sat on shelves, Costco could literally lose a significant amount of the value just in that short period of time. And this is also why they've instituted a no refund policy, because gold is the type of thing that if you were to buy it, walk out of the store, drive around the block, and then come back and try to get a refund, the value could have changed substantially. So this is one of those rare things that even Costco is unwilling to provide refunds on. And that leads us to another big problem with buying this from Costco. While Costco will be your dealer on the sell side, they have no interest in being your dealer on the buy side. No, if at some point you want to buy your gold, you can't just take it into your bank, you can't take it back to Costco, you have to go and find a gold dealer who's willing to buy it from you. And here's where you really need to understand the numbers. Because if you were to buy gold right now from Costco, you're going to pay a 5 to 7% premium over the established spot value. And when you go to sell it, guess what? Your dealer's going to charge you a 5 to 7% premium in order to buy it back at whatever value it's worth at that time. So by the time all is said and done, you're going to pay somewhere between 5 and 14% premium for both the purchase and the sale on that physical gold. Which means if you bought it with the expectation that it's going to perform about the same as inflation, you're going to need to hold the physical gold for at least 5 years in order to just break even. Which means even though you're buying physical gold in order to fight inflation and hedge against inflation, you're actually putting yourself 5 to 7 years behind, depending on what the inflation numbers end up at, from day one. Making physical gold, like I said, one of the worst investments you can make, and definitely one of the dumbest impulse buys you can make. I've heard gold needs to be part of my portfolio. I've heard that it's part of a balanced portfolio. So the question is, how do I buy it? Well, you don't buy it physically. You buy it through something like an ETF that tracks the price of gold. That way you don't have to pay the premiums on the sell and the premiums on the buy. And by the way, the cost to purchase ETFs nowadays is pretty much zero. Or as an alternative to that, you purchase the producers of the gold. Those are the people who are really going to profit off of the gold buying trends. Not Costco, not the other dealers, and definitely not you if you find yourself purchasing physical gold. So again, keep this in mind. Costco, just like every other dealer, wants your cash, not the gold, because they understand that that cash is investable in other things that have far better returns. And just like Costco, you should be figuring out how to get more cash so you can make better investments than things like gold bars from the world's #1 impulse buying center. Oh, and if you want to see 7 lessons I wish I would have known before I became a stackaholic, make sure you check out this video right here.